Hi guys, I am VP. In this channel, let's learn about what's personal income, needs and wants, our income, emergency fund, insurance, fixed income, and investing in different asset classes. Following this, in our first video, we are going to see how to split our income in percentage and fill it in different buckets to achieve our financial needs. See how to split our net income into different buckets. Okay. What is net income? Net income is income after investing in our business and ourselves. Okay. Typically, we all have three types of income. One, business income. In another one is high income skill or self-employed. Another one is job income. Job income we all know it's we work and we pay for it. And self-employed or high income skill is like kind of freelancing, and we expose our talent. For that we get paid. That comes in this category: high income skill or self-employed. And business income we all know that by selling a product or service, if we get an income, that's a business income, and that's income. Okay, income after investing in our businesses or existing businesses and ourselves, it's net income. Okay, if we earn if we earn 100 rupees of net income, then these are the amount we should allocate in different buckets to our to fulfill our financial needs. Okay, if we earn 100 percentage of our net income, we should split into 40 percentage for our needs, 10 percentage for our fun activities, and 10 percentage for emergency fund, 5 percentage for insurance, another 10 for fixed income, and 25 for our investing in stocks purposes. Okay, now what is the 40 percentage of our needs? Needs can be house rent, food expenses, internet bills, and etc. And the 10 percentage is fun activities, like going for movies and eating outside and stuffs like that. Okay, the 10 percentage of our income we should definitely invest in emergency fund. Emergency situation can occur at any time, so that we should be ready for it. For that, opening and savings account, and we should put the 10 percentage of our money, this is for short term. The savings account could be short term. If we collect a sizable amount, then we should always consider buying physical gold with that sizable amount in savings account. Okay, now the 5 percentage of our income we should invest in our health insurance, in insurance policies like health and term insurance. Health insurance is a must one. We cannot predict our health in future. For that, we should always prepared for that by investing some amount of money in our health insurance and term insurance. Term insurance I don't recommend. If you have an asset, if if you follow this procedure for a long time, then you will leave your family your asset for them, so that they won't worry. And next is fixed income. The fixed income could be classified into three types: real estate income, FD and RD, and bonds. I am considering real estate as a fixed income because now the real estate market is not that much booming. I am considering this as a rental property, buying an asset, real estate, and rent it out, and you get a regular income on monthly basis. FD and RD also like that. It's you will invest sum of money into the banks, and they will give some percentage according to some banks, and they will give some percentage of amount for your fixed deposit money. And like bond also likewise. Bond is a security which is issued by governments and corporates to raise money for their businesses, so that if we invest in their bonds, they will give interest for our amount we are invested in monthly basis, quarterly and yearly basis. And next 25% we should invest in stocks. The stocks I always recommend 10% should be must have index funds, and 15% for individual stocks. Okay, if we failed in investing in our individual stocks, like we may pick the wrong stock or something like that, a index fund will help us in the long run. Okay, that index fund also we should diversify our asset into domestic index fund and international index fund. The Nifty 50 is top 50 companies in Indian stock market, and Nasdaq 500 is top 500 companies in American stock market. By buying the index fund, we are investing in top 50 companies in India, and also top 500 companies in American market. Uh, okay, guys. Now let's have a quick look in the Excel format. the above calculation was done here. Now let's consider our income for 1 month is 25,000. Now we are investing 10% of our income for ourselves to evaluate our to elevate our high income skill, or to study a course or something. And after deducting this amount from our income, we arrived at the net income value, that is 22,500. In this 22,500, we are going to split into different buckets to achieve our financial goal. Okay, now in this 22,500, we are going to put 50 percentage of our money for our needs. In needs is 40 percentage of our money for paying our bills, and 10 percentage of our for money to our fun activities. And fun activities like eating outside or going to tour or something. Okay, now the relatively the 2250 amount may look small, but uh, we are already investing some amount in ourselves to elevate our upcoming in a higher income, so that we are already put aside some money to increase our upcoming income. Okay, now let's see the remaining 10%, remaining 50%, how we are going to invest in things. Okay, in this next 10%, we are going to invest in emergency fund, 5% in insurance, 10% in fixed income, and 25% in stock portfolio. Okay, now let us see if we are getting 30,000 income per month, then it will look like this. The problem is really we are in our income only. If we try to increase our skill and increase our income, then it is very easily we can achieve our financial goal quickly. So that only at first itself, before we spend for our needs, we are putting some money aside to elevate our higher income. Okay, now let's see. Now if we see, for fixed income, it's just 2,700. It's relatively small, but for over a period, if you save the small amount, it will become a big corpus. I will show in another slide. Okay, now in this section, we have the calculation for 1 year calculation, 1 year income calculation. In this year income, we have 5 lakhs per annum. Let me just reduce to 3 lakhs for a normal calculation. Okay. If it's a 3 lakh session, I chosen 3 lakh because 3 lakh will be an average annual salary for many people. So if we earn 3 lakhs, then 10 percentage of that money is 30,000. We are investing in ourselves, and remaining is our net income. Okay. Now uh, with this yearly net income, we are going to spend almost 1 lakh 35,000 in needs, and 27,000 in our emergency fund, and 13,500 in insurance, and 27,000 in fixed income, and 67,500 in our stocks. Okay, if we see our fixed income investment is 27,000. For we are combining the uh, income of 12 months, so that the corpus could be look bigger as compared to every month. Okay, with this 27,000, we cannot buy real estate or put an FD, but for 10,000, we can start buying bonds, government bonds and corporate bonds in uh, with the help of brokers. I'm going to explain how to buy in later videos. Okay, for 13,500, you will get a very good health insurance, almost cover of 25 lakhs. We will see in the further video. Okay, now let's see the calculation for 5 years. This is for 1 year and this is for 5 years. For 5 years, let us consider our salary is not increased, even though we are investing 30,000 per year for ourselves to elevate our skill. But we consider that our salary is not increased. We consider as 3 lakh for next 5 years. Okay, if we see that we spend almost 6 lakh 75,000 for our needs, and so on. And see, in our stock portfolio, we have 3 lakh 37,000. It's really a good amount of money to invest over 5 years in stock. In the 3 lakh also, we will invest a small amount in an index fund By seeing it in 5 years, you will also have this amount plus the return on investment in from your first month from your salary. Okay, now let us look at 10-year calculation. We are seeing the 10-year calculation without increasing in any hike or increasing in our income, net income and salary income for year. Okay, now see if you, even though your investing amount is small, if you do it for 10 years, look at the amount of money we have. In stock portfolio we almost have 6,75,000. It's a very good money for 10 years. 10 years. And for fixed income we have 2,70,000, and for insurance we already paid almost 1,35,000. The insurance amount is, as you get gauge, the amount will slightly increase, but that's not matter. We will keep on increasing our income also, so that matches equally in terms of percentage. Okay, now let us consider a small trick that if we consider our salary as 5 lakh, and see the changes. The changes is literally high. If we see 5 lakh for salary for 1 year, we have almost saved a 1 lakh 12,000 in our equity portfolio. It is relatively very good, and fixed income also 45,000. And you see now I change the income, the amount also changing, but relative with the percentage of our income. We are not just simply allocating some money for emergency fund, insurance, and fixed income. We are calculating with the percentage, so that it looks easy and comfortable for us to fulfill our financial needs. Okay, okay guys, hope you have learned something related to personal finance. In our upcoming video, let us learn everything in detail. And this video is releasing on August 15th, that is Independence Day. I hope by next Independence Day we will be independent, financially we will be independent. And thank you.